In this video, we will be studying about the domestic aggregates in national income. See, in order to calculate the national income, it is very important to understand all the aggregates that you make. Now, your national income can be calculated from your gross domestic product at market price your national income is NP at FC, which means net national product at factor cost. See, this you take N is net, NP is national product, FC is factor cost. Now, gross domestic product is the value of all the production of all the goods and services that are produced in the economy during an accounting year. Your domestic means that within your territory, right? So you denote this as GDP, gross domestic product at market price. Means all the product that are produced in the economy during an accounting year, all the goods and services. So this is your GDP at MP. We will learn the various methods to calculate this, like your income method, your expenditure method, your value addition method, right? From this we will calculate national income. The second we have the domestic aggregates. This is number one we are starting about. The second we have is net domestic product at market price. See, from here to here it is same, only the difference is of gross and net. In order to convert gross to net, we subtract depreciation, right? So you will be able to make NDP at MP only when you subtract GDP MP depreciation from it. Right? See, your GDP MP, your NDP MP, only the differences of gross and net. So in order to convert from gross to net, you deduct the depreciation, or you call depreciation with other name, that is consumption of fixed capital. So this is your NDP at MP and GDP at MP. From G to N, rest other being same, you have to subtract depreciation. We calculated NDP at market price, right, before. Now we have to calculate net domestic product at factor cost, means net domestic product at factor cost. See, NDP and NDP are same. You have to convert market price to factor cost. For that, what you will do, in order to calculate NDP at FC, you need to convert NDP MP into FC. From this, what you do, you subtract indirect taxes subsidies to it. So you subtract indirect taxes plus subsidies to this, you get FC, right? So your indirect tax plus subsidies, you can also write it as net indirect taxes, which is equal to your indirect tax minus subsidies, right? So you can also write it there as NDP at FC is equal to NDP at market price minus net indirect taxes. So this is how you come from MP to FC. Now if you have to come from FC to MP, if this is given, you have to calculate this part. What you'll do, you'll take this here, you will add net indirect taxes to this and you will get MP. So all these are interrelated. Now let's suppose you are given with GDP at MP, right? You have to calculate NDP at MP, number one. Second, you have to calculate GDP at FC. Third, you have to calculate NDP at FC. Right? All these three things you have to calculate, and you are given with this. See, in order to calculate number one, that is NDP at MP, you are given GDP at MP. So DP, domestic product, and market price, sorry. These are same, only what difference you have to make from G to N you have to convert, right? So in order to convert G to N, what you do, you subtract the depreciation, or you also call it as consumption of fixed capital, right? The second we have is GDP at FC. Now from GDP at NP, you have to calculate GDP at FC. See, now GDP and GDP are same, right? You have to take into consideration MP and FC only. Now you have to convert market price into factor cost. What you do, you deduct from market price, you deduct indirect taxes and add subsidies, right? Now from GDP at MP, you have to make GDP at FC. NDP at FC you have to make, and you are given with GDP at NP. Now let's convert first G to N. Let's take GDP at MP minus depreciation. What you will get? You will get NDP at MP, means net domestic product at market price. From NDP you have come same, this is same. Now you have to convert market price to factor cost. So for that, what you do? You deduct your indirect taxes and you add subsidies. So this is how you calculate your different products. This is how you calculate your domestic aggregates. From if one is given to you can calculate all the others with the given information. I hope you like our video. Please download our Scholars Learning app and enjoy the learning experience with us.